Hello, hello, everyone. It is good to see you. I don't know. Oh, I'm not full screen. Sorry. Hopefully, I am live in the groups this morning. In today's episode, we are going to talk about a simple, free, and quick way for you to start bookkeeping. So, my name is Christie Varner. I am a virtual CFO and business strategist with Victory Advisory Services. And in today's episode, we are going to dive into getting some record keeping done for those of you that don't have any kind of record keeping. So this is a quick and dirty method. It's simple, free, and easy. So who doesn't like that? That's like hitting all three buttons. So let me know if you like that. Hey guys, it's good to see you. Thanks for saying yes to StreamYard because it allows me to see your names as you come in. So hey Janelle. Anyway, so you guys, I have my cup of coffee. Grab your cup of coffee because what I want you to understand is this does not have to be hard. So accounting is debits and credits, and it's double entry accounting. It's double entry recording. So for some of you, you're like, I don't even know those words, Christie, and double entry accounting, like I'm bored just hearing that. Okay, I get you. I get you. So today, we're going to throw out double entry accounting, which I will tell you kind of scares me just even saying those words. And I'm going to talk to you at the end about double entry accounting some more because it actually is the way to go. But the thing is, you have to start somewhere. So if you are feeling like you have no idea, when I asked this week, have you closed your books? And you're like, I don't even know what that means. Do you know what your profit and loss was for last month? Or are you having a hard time keeping up with what your sales and expenses are? If all of that seems overwhelming to you, then this is the right thing for you. If your receipts are in a shoebox or somewhere on the web, then that means it's time to start with record keeping. So we're going to start from the very, very basics today. And that is from your cash account. I've talked to you guys about it before. And if you haven't seen me talk about cash, go check that episode out. But the primary reason that small businesses fail is due to problems with cash management. So this is going to be our primary focus for those of you just getting started. This is particularly helpful for those of you that have not very many transactions yet in your business, and you don't have a bunch of assets and liabilities, a bunch of things that you own or you owe. So this is going to be perfect for you, and you can get started in a matter of minutes. So let's jump right in, dive in, and talk about that. So this has to do with your cash alone. So we're just going to track just the cash. All you need to do this method is a spreadsheet. So if you use Excel, that's great. You can also use Google Sheets. Google Sheets is free. So if you don't have Excel, you just sign up for Google and you get a Google Sheet. And then it's cloud-based, which is really, really handy. In this example, I'm going to use Excel because that's just what I happen to make it in. But if you are in Google Sheets, you can upload Excel into it and vice versa. So it's super easy. But I want to show you that. So when we talk about taking care of your books, let me just say that bravo to you, because first things first, even though you don't have any record keeping for your business, you're watching this episode. So it means that you understand that you need to. And I always say that numbers are insight, and they're the leverage you need to get from where you are to where you want to go. So bravo to you, because you already recognize that and you sat down and were like, okay, I'm going to do this. Fast, easy, and free. Like, who wouldn't? Okay. So let's dive into it. First thing that you need is a spreadsheet. And what we're going to do is a very simple cash transaction ledger, essentially. Okay, this is as simple as it gets. It's 3 columns. This is your date, your description, and your amount. You are literally, oh, I took off beginning balance. So you're going to put your company name in, and you're going to put your time period in. And you can do this every single month, and you just keep up with it. So let me just, I made a basic one that we can talk about here. So this is a basic. Let me zoom in on that so that you guys can see that better. View, zoom. Let's go 200%. Can you guys see that better? Yeah, much better now. Okay, so in this particular example, I am gonna say, sorry, let me move my coffee out of the way. I have Razorback coffee today because my older 2 kids both went to Arkansas. Woo pig. So anyway, so we're going to do this example of March of 2021. And so essentially, let's just say your opening balance in your bank account on March 1st is $2,322.33. You can get that right from your bank account online or on your bank statement if you have that. And then you are essentially going to put in the money that you spend as you spend it. Oh, yes, better, glad to know. You're going to put in the money that you spend. I'm going to take myself off and make this even fuller screen for you guys. I think that will be helpful. Okay, that will be even better because it's even bigger now. So this is essentially going to show you the things that you spent your money on. So let's just say that you spent web hosting this month, but then you got some money. You're a coach. In our example, you're a coach. And so you got some coaching fees on the 15th. Woohoo, you got $2,500 in coaching fees. So you have several people set up that you invoice, and money comes in on the 15th and the 31st, depending on when they pay during the month. You had to spend money on advertising. You did some Facebook ads. Oh, you have Kajabi for your website and for your email and your online course. You have to pay, obviously, your internet. You paid some graphic design. Oh, goodness, you got some office supplies, bank fees, always. You have a virtual assistant. If you didn't see my Wednesday wins, I got a virtual assistant that is a rock star, and I'm so happy about that. And then look, yay, you got more money in the door. You got coaching fees. And then on the last day of the month, you were like, I have to pay myself also. You guys, if you have not seen my talk about paying yourself and having a profit for yourself, like that is so important. Sorry, I'm trying to move all the things around, but it's so important to have that. So you want to definitely be able to pay yourself. So what that's going to do is that's going to come down here and calculate for you that you have a closing balance of $4,918.33 at the end of the month. Now, it's really important that you go and check your bank statement and make sure that you captured all the money that actually flowed through your accounts for the month, right? Because this is kind of like just your bank account, just rewriting it, except for you are writing in what all these different things are. A lot of you may be able to actually download this information directly from your bank, save it as a CSV, which would be an Excel document, or Google Sheets. So you can just download that directly from your bank, or you can write it in as you go. Right? Like there's no reason not to check it. Now, so here's the cool thing. So this tells you that you started your month with $2,300. You ended your month with $4,900. But we just talked about that you don't even know your profit and loss. Well, here, let me just tell you that an owner's draw, if you are a single member LLC or a sole proprietor, that doesn't count as your profit. It doesn't count as an expense. It just counts as, you know, money that you took back out of the company. So in this instance, your opening balance wouldn't count for your P&L, but all of this is all revenue and expenses. And so if we take this and we just add it, look here in Excel and also in Google Sheets, it shows you at the bottom that you have $5,596 in revenue for them and net profit for the month. So how cool is that? So it just shows you. So this is a really, really, really quick and dirty thing to do this. Now, let me just tell you, if you are willing to take it one step further, you can get even better information, and it really won't take you much longer. So that same information, we're going to expand now. Let me see. I'm going to take myself off again so I can make this big. So what we did here was we are starting with the same 3 columns that I talked about before. Okay, these are the same 3 columns, the same 3 numbers. I've just highlighted them. But what you're going to do is you're going to also add, you don't have to, but it's good to add a transaction number. So I'm just calling these March because we're in the month of March. I like to do that. And you can call them March 1, 2, 3, 4, 5, 6, 7, 8, 9, or A, B, C, D, whatever. But this might be a way for you to keep up with the receipts and everything that you would need. And then you're literally going to take each of those numbers and you're going to say, is that cash in the door or cash out the door for my company? And you're going to put it into one of these columns. Now, these columns are just examples that I made for this particular little company. So you would want to do your own. And I've talked about this. You're going to kind of group things together into like things, like categories. And if you have no idea what categories you might want to use, then check out your Schedule C, because that's a great way to see what the IRS is going to ask for, because this is going to make your life so much easier for tax time when you come to give your books over to your tax advisor, rather than hand them that, printout of all your bank statements and, a handful of receipts. You're going to have this already categorized, which is going to be super helpful to them. But this is also incredibly helpful for you. This is a quick way for you to look and see how much you're spending on each kind of broad category, right? And it results in the same thing. You still start with, this $2,300, which is just hard coded in there, and you end up here at your ending cash balance. But you have taken each thing. So for web hosting, for instance, I say, okay, I spent $13 on web hosting. I'm going to call that software and subscriptions. So you literally take each thing and you go, what kind of amount is this? The $2,500 in coaching fees, well, that's sales for me. We didn't put in any money, but if you had to add money into your business this month to help it go, then you would put that here as owner investment. When you take money out, for instance, here at the end, it's called owner's draw. If you are paying someone, like you're paying your VA, that would be contractor payments. But when you pay yourself, that doesn't count on your P&L. So that's just owner's draw. So that comes right back out. So this is a simple way to track it. Can you see how much more information it is? And yet it's still, like, you guys, you can get this going in a matter of minutes. So the cool thing about this is I also made this at the this synopsis. So your beginning cash, which is right here, and your ending cash, which is right here. And you can see if everything works right, then this number should be this number, right? Your last transaction should equal your ending cash for the month. So if you have this, then you can see, like, here's the cash change for the month, okay? So ending cash, actually, I need to make that be, sorry. I'm gonna make that be a plus. Oh, goodness gracious. Nope, a minus. I'll fix that afterwards. Sorry, I get too distracted. But this is actually, you made $2,500 for the month. So that will be a positive when I fix that back. And then you need to be able to track. So the change in your cash account can only be money that you put into the company, money that you took out of the company, or your net profit or loss. That's all that your money really is, the change in your cash. So you see here, we're testing that out to make sure that we got all the pieces. These two numbers have to equal each other. This is profit and loss for the month. And we talked about that. Like, remember when I showed you how to sum it on the first one? So now it's essentially going to say the cash in minus the owner investment, because that doesn't count as your on your profit and loss, your income statement, and your cash out, which is minus your owner's draw, equals your profit and loss. And then you're going to separately pick up your owner's investment and your owner's draw. That equals your cash balance change. So then you can test that both of those are done and simple. Janelle, thank you so much for asking about that. Yes, I just finished this because I just expanded it and was like, oh, I saw somebody else talk about this. And I was like, I love sharing with you guys things that I think are helpful. So you can, screenshot this and take this in. But I also, within the Small Business Finance Simplified Facebook group, I am going to drop that. Sorry, I'm trying to get back over here so that I can. Oh, goodness. It might be a techie day, but we're going to get this done. Oh, my goodness. My mouse is like having a morning. Sorry. I cannot seem to get my mouse back over here. Oh, there we go. Goodness. You guys, I needed more coffee, but literally this is that simple that you guys can do this. Like, grab a cup of coffee. This does not have to be hard. Ask me questions if you have your questions, but I am going to put this for free in Small Business Finance Simplified Facebook group. If you're in that, then come join us. If you are watching on YouTube, thank you so much for watching. Please subscribe to our channel. I drop tips, trainings, and strategies in simple ways each week. So I hope that that is helpful. Let me just say that this is literally just tracking cash. And cash is so, so important. Like I said, it's the #1 thing that can sink your business. It doesn't matter how profitable you are. If you don't have cash, it can sink your business. But you guys, this is just one side of the equation. Money doesn't just come in without affecting another side. Money doesn't just go out without affecting another side. Double entry accounting is really important. It's why every big business uses double entry accounting. So I want you to know, like, we need to move toward that. But if you don't yet have a bookkeeper, and you just need to have some sense that you're taking care of your cash and you are understanding where you're going, because in the back of your mind, you're like, Christie said the cash matters. And I'm telling you, cash matters. Please keep up with the cash. You can do this. This is very simple and it will help you with your business. And then as you move forward, you want to get a bookkeeper. You want to get some strategic advisory to help you grow your business so you can move towards your goals. But first things first, let's just start with this. Let's just start with one side. This is only tracking your cash, but cash is important, and it will start to give you some insight into your business. It doesn't help you if you have accounts receivable and accounts payable. Like, literally, this is just the cash. So it doesn't give you insight into that sort of overall picture. I understand that this is limited, but this is going to be very helpful for those of you who are just getting going. So I'm going to drop this into the files section of Small Business Finance Simplified. And I would love for you to use it and let me know questions that you have. Janelle, absolutely share this with your daughter. Invite her to the group if she has a business. Would love for her to be part of this. You guys, thank you so much for watching, and I will see you again next time. Thank you.